Well, the world's most valuable company has just posted its financial numbers for the first quarter. The oil giant Saudi Aramco, owned by Saudi Arabia, watched its profits slide some 25% over the last few months. That's as the coronavirus and a price war with Russia sent the cost of a barrel of oil into freefall. So let's bring in CNN's emerging markets editor, John Defteris in Abu Dhabi. He joins us now live. Good to see you, John. So did the results live up to expectations with that steep slide in profit?
Well, you know, Rosemary, because of the state of play in the energy market right now, the bar has been set pretty low for Aramco. And this is quite an extraordinary period of time because it is their first quarterly results as a publicly traded company, having gone to the IPO at the end of 2019. As you should suggested here, a 25% slide. They came in at $16.7 billion versus expectations of something about $1 billion higher. But this time last year, they made over $20 billion, but they made money again in the quarter. The international oil companies that don't have access to this cheap supply, abundant supply of crude, are not making money right now, for example, in the United States, where they're laying off workers. That's not the case with Aramco at this stage. But this chaos that you talked about in March with the coronavirus hitting demand by about 30 million barrels a day in April, then the price war that happened with Saudi Arabia, Russia, and the United States, that won't be felt until the second quarter. So the current quarter they're in right now, when they produce the results later in the summer months, will be terrible. Let's call it like it is, because we had negative prices in April and we're hovering around $30 a barrel right now. Finally, this does fill the coffers for the state. They made $88 billion in all of 2019, and $73 billion was paid as a dividend to the kingdom.
And so, John, what sort of pressure does this price today put on not just Saudi Arabia, but all the other Arab producers?
Yeah, I think it's a point worth underlining, because everybody says, well, they're the low-cost producers, they're still making a lot of money, but their budgets are high. So countries like Saudi Arabia, the UAE, Kuwait in the Gulf, Iraq's a major producer here in the Middle East, they were living off of prices above $60 a barrel for the international benchmark last year. We're looking at $30 right now, maybe an average price of $35 this year. So you're looking at about a half in terms of revenues for the countries. As a result, the Crown Prince, Mohammed bin Salman, took what's seen as drastic measures overnight by announcing the fact he's tripling the VAT tax to 15%, even though it was 2 years old, wiped out benefits to government workers that were worth about $300 a month in terms of a cost of living adjustment, gone. His eldest brother, Abdulaziz bin Salman, the respected Minister of Energy, asked for another cut of 1 million barrels. So, Rosemary, from that price war and production of 12.3 million barrels, huge output, we're down to around 7.5 million barrels today, cutting about 5 million barrels in a span of less than 2 months. So at desperate times and very tough decisions coming from Saudi Arabia, that decision on the VAT was so alarming. Here in the UAE, the Ministry of Finance said, we're not going to do the same. There's a little bit of a panic because of the low oil prices throughout the Middle East region.